Let me get in Parag Parikh, Chairman at Parag Parikh Financial Advisory Services, somebody who looks at market cycles, market psychology, investor sentiment, somebody who deals with those intangibles, so as to speak. Mr. Parikh, thanks for joining in. Afternoon. Welcome to the show. Prashant here. Do you sense despair here, distress here, or just stress? What's going on?
We were parting for 2 years, so I think we are just taking a break, and we are allowing the other markets to now perform. Very difficult to say where the markets will go, but even this market also, the sentiment is turned from bullish to bearish, and when such opportunities come, it's good time for the value investors. If you are into bottom-up stock picking, that you'll definitely get values for the long term.
Right, Mr. Parikh, when you say we've been partnering for 2 years, the market show's been partying, but if you do a quick dipstick in terms of investors who have actually participated in this move up, the moves have come in short bursts. From the lows of October 2008, suddenly you got to about 45, did nothing for about a year from October October 2009 to about September 2010, then you suddenly got a 500, 600 point move. My question is, you're already down about 16% as far as large caps go, about 30% plus on some of the mid to smaller cap indices. The old saying, be greedy when others are fearful. Is this the time to be slightly greedy, or at least start to look at stocks?
Yes, you got to be always greedy in the markets when the markets are down, and it's the most difficult thing to do, to be greedy at that point of time. As I told you, bottom-up stock picking, you choose stocks on the individual basis rather than looking at what the market is doing. If you see a lot of stocks which have fallen down, nothing wrong has happened to those stocks in the last 3 to 6 months. Only the sentiment has changed. Now, with this sort of a sentiment, who would be a courageous man? A man who would leave aside everything which is the noise of the markets, stay put or stay invested with the conviction of the stocks which he is holding.
Mr. Parikh, what is the problem as you see it? We've heard about the inflation problems, we've heard about the governance issues. In your view, is it one or the other combination, or just like you said, we outperformed last year, so in this year we're just balancing out for starters?
That's also one point, because nothing can go up one way. There's got to be reaction for the markets to be healthy. Secondly, if you're talking about inflation, actually stocks are the best hedge against inflation. So in an inflationary situation, I would rather be holding stocks, because when I'm holding stocks, I'm holding a business, buying a business which sells a product or a service at a profit. It has got investments made in buildings, machinery, employs knowledgeable workers. So when inflation is going up, it becomes difficult for any other competitor to come inside the same business, because the business has a pricing power. So if you look at all these things, then I think I would be happy if the inflation is going up and I'll be into stocks. I think we are unnecessarily thinking about inflation. Oh, because of the inflation, interest rates will go up, and that's why the profits will. Well, everything adjusts over a period of time. You've got to have patience,
No, we were actually, Prashant and I were having this discussion, and there is a tendency that, in high inflation times, markets don't always underperform. So I'm just wondering what's different this time around, and you're making the same argument. What's different this time around?
There's nothing different. The sentiment is different. Okay. And plus what this thing here, this is something which is known as an availability heuristic. In behavioral terms, it is where we make decisions on the recent effects and all the readily available information. Now, if you have 5 newspapers just pointing inflation is there, markets are going down. Next, the markets will go down on reflexivity. Okay. This is the way our automatic or intuitive thinking works, It's not a rational thinking.
Right. That's the behavioral aspect of it, Mr. Parikh. I'm going to come back to that. In your assessment, have the fundamentals changed so much to warrant the market to trade around where it is right now?
First is, we don't know whether when it was trading 6 months back, whether it was right in tune with the fundamentals. So there's no point in really trying to look at the market and whether it's trading with the fundamentals, because if you are looking at a BSE Sensex, it's made up of 30 stocks which are large cap stocks. Nifty is made up of 50 stocks. You have over 7,000 stocks listed on the markets. Now, are you using the right sample to judge any investment decision? I would say no.
All right, okay. Fair enough. So you're saying, just go bottom up, forget the index and what's happening to the broader market.
Can't have the volume.
Right.
I think Prashant, I was just trying to sort of ask you what what is the way to best strategize this market? Then just go bottom up, look at individual stocks, ignore the index at least for now.
Yeah, the most simple rule is what is stock investing? Is stock investing got to understand you are not buying a stock which will go up or go down, because nobody knows that. It's stock investing is all about buying a business which is run by a credible management, business having good characteristics, and if you are able to identify such stocks and when the markets behave in such a way, you have such opportunities on your way.
What would be the benchmarks that you would use right now then?
We are in a fast changing situation, in a dynamic society. You can't be having really a benchmark. And the problem what we are doing is we are looking at the BSE and the Nifty as a benchmark.
No, in the sense that you look at price earnings ratios, are you looking at,
No, it will be a host of factors, Like, of course, I would say that first is I would take a good business which is run by a credible management, because I am becoming a minority shareholder. So whether I will entrust my money with a management like that. Then secondly, a business which requires least amount of capital. Otherwise, if it is heavily debted, then the business is only there for the creditors. Then having a strong brand, a strong distribution network, a pricing power, all of these sectors which would be very important, rather than the financial figures,
Okay, we'll come back and actually pick up on some of those aspects and see what fits into those benchmarks. Back in a couple of minutes, we'll continue our conversation with Parag Parikh. We'll also continue looking at the markets off about 1%.
Alright, welcome back. New low for the day, 53.24 on the spot Nifty, 72 points off, 1.33% lower. 1.25 down on the Sensex, 228, 230 points off. On the verge of breaking 17,800 on the Sensex. Let's talk about stocks, Mr. Parikh. You're saying bottom up is the way to go. What would you buy?
Well, at present there is two stocks which I like, which I have been always talking about them. One is Noida Toll Bridge. It's a great business. It's a greenfield project which came out in 1997. All the expenses have been done, and now the toll bridge is ready. It's collecting toll tax. It started paying dividends. When does a company pay dividends? Is when it starts making profits. It paid a dividend of about 50 paisa per share. That was an interim dividend. Hopefully the same would be repeated as a final dividend, and at about 3% dividend yield you are getting that stock. I would buy that stock. IL&FS investment manager, because some FI is getting out, selling big lots of shares, brought it down. It's a great opportunity for you, not because the stock has gone down, because the stock has been hammered. The sentiments is low. I would love stocks like these.
The second one you said is IL&FS investment manager.
Investment manager.
The private equity company.
Yeah. It's a great business. They get money to manage. 7-year lock-in to 10-year lock-in period. They get their fees. It's not dependent upon how the stock market goes up or down like a mutual funds. And they have been the first entrance into the markets. They have got a good knowledge base, a good brand name. Anybody coming in with big money, they go through IL&FS.
Okay, that's IL&FS investment managers. On Noida Toll Bridge, we used to talk a lot about it, then it sort of fell out of everybody's attention, but the business is good, and they also had some opportunity to unlock value in their land surrounding.
They've got about 99 acres of land which they can develop near the Yamuna river.
Okay.
All those things are there, but markets always like fancies, and you make money when you don't buy those fancies, because when you chase fancies, you pay a fancy price, and when the fancy ends, you only have a fancy loss.
That's true. But even in terms of their toll charges, they're all linked to CPI closely, so there's never any problem in terms of their margins, etc., right? Okay, so that's Noida Toll Bridge. Anything sort of within the larger stocks that you like? Because some of those, some of the frontline names, index names have also corrected substantially. Would you look at any?
See, I don't look at larger names or anything, but these are the two stocks really I like. Normally we are not in the business of manufacturing ideas. So ideas you don't get every time. So whenever you get an idea, you have to work on it, you know. That's why you may find me repeating the same stocks, but it's difficult to really get good values in the market.
Right. Mr. Parikh, just a bit of history in your call on Noida toll. Have you turned positive? It's been your recommendation for a long time, or you sort of after the fall to about 25, 26, you've turned you like the stock as an added bonus?
I liked it at 35 also, so I love it today.
Right. All these things about the land they have, and they've had all of it, I think, since 2005. I don't know exactly when the stock made it to the market, or when they. I think 2005, 2004 is when the bridge was inaugurated. The land's pretty much still there. The talk was even then that they'd have the opportunity to develop the land, etc., etc. Is that perhaps the reason you sort of you like the stock so much? That at some point they'd be able to monetize on it, or is just the pure business?
No. I'm really not buying the stock, because this was a question she asked me. That's why I told about the land part. But I'm talking about a good business where all the money has been spent, and now they have to only collect the taxes. They are not going to go to the shareholders and ask for money, because the money has been already spent. The car goes left or the right, they're going to collect their tax, their toll tax. And that's a great business, what I like. And if you really go into the details, you can look up the Noida toll bridge on our website, where you can have the details, because I will not be able to finish all the details in the time allotted to me, or the time allotted for this show for you.
Right, that's okay, that's fine. Why not look at a slightly more growth oriented sort of sectors? This is a very steady business. Absolutely right. But what's the great upside in this?
See, what is growth? When you talk about growth, growth is all about a share which went high up, way up. It's always in hindsight, because for any growth stock, it has to be a value first. So tomorrow, if Noida toll bridge all of a sudden starts going up to 80, 90 rupees, then people will call it a growth stock. So growth is always in hindsight. There's nothing like a growth stock. First you have to have a value before. And when you cannot justify, or fund managers cannot justify giving high valuations to certain stocks, they call it a growth stock.
Mr. Parikh, you talked about two specific ideas. One of the things you alluded to earlier when you talked about benchmarks or ways to sort of judge good or bad stocks in this market, you talked about governance. The governance issue is actually something that's really weighing down on the market broadly as well. And that, you look at small companies like, say, an Allied Digital, I'm just using it as an example. You hear the slightest rumor and the markets are really punishing. So that is becoming more and more of, in some ways, a driver on investment decisions right now?
Yes. You just see in last 3-4 months, what have you been hearing? Only about scams and all. Now that does fear, they're saying, scare away the investors, because they are going to do business over here. And here they find what is happening, there are no checks and balances. So it's a very important factor which is responsible for the sentiment being downgraded,
And especially from a retail investor. In any case, I mean, the retail investors are sort of just tippy-toeing back into the market, and now you've got this whole spectrum of scams. So the retail investor coming back into this market doesn't sense.
Don't call it a retail investor, you call it a retail punter. Because anyone who every day buys and sells is not an investor.
Okay.
Investors only buy and then sit down, because what is the definition of investment is they're saying, first you've got to do it from your own money. You buy a value, you sit on it, and there has to be a reasonable rate of return which is there, which I would say 15 to 18% in equity investments.
Okay, but the reason I said investors, because even if you look at, say, the inflows going into mutual funds, even those have slowed down. So, I mean, then isn't there a slight negative sort of sentiment towards equities even at the investor end? People who would invest, say, through mutual funds and not just fund? Yeah,
see, this is typical of the investor psychology. Investors find a stock or a mutual fund, they're saying, more risky when nobody is buying and when the prices are going down. And they find it less risky when everyone is buying it and when the prices are going up. So this is how they always lose money. The idea would be to do the opposite.
All right, all about investor psychology. Thanks so much, sir. It's been a pleasure chatting with you after a while. It's Parag Parikh speaking about some ideas and also, of course, about the broader markets. Taking a quick break. Back in.